All right, welcome to Drill on Earnings. We've got the latest quarterly look at Applied Optoelectronics. This is the business story behind one stock and a move, and the stock is moving a lot. This stock does move a lot. I watch it a lot. I'm the chief market strategist for Epistrophy Capital Research, Cory Johnson. We look at the 50 most important companies in technology. I think this is one of them. I'm very biased. I own this stock, and this is not the quarter I expected from the company. Indeed, the stock's selling off quite a bit in after-hours trading. Let's look at why, and look at what the business that a lot of people think it's in, including me, and the other businesses we don't think about much, which is also in. So Q4 earnings, a little bit better than expectations, which were $99.9 million in revenues and a 2-cent loss. The company doing just a little bit better than that, over $100 million in revenues, and a weird operated non-GAAP loss was basically in line. But fantastic growth in this company that makes data networking gear. Of course, with data center and AI is everything. So of course, we'd expect a really big quarter and a 66% rise in revenues because of cable? Yeah, they've got a cable TV business. I knew that. But the great growth I thought we would see from this company in data networking wasn't there. The great growth was in fact in cable. Indeed, the cable business for these guys is 52% of revenues. It's bigger than their data center business, especially this quarter. Data center just 44%. There was a surge in their cable business. They sell this 1.8 gigahertz amplifier product, which moves data onto cable networks. And of course, people like me at home, working all night, whatever, consuming lots and lots of data, are in fact using data at home and moving that across cable lines. It's a good business for Applied Optoelectronics. That's what they saw in the quarter. They got a substantial order in their quantum bandwidth networking product from one of the largest cable operators in the country. And the result was with some better data center numbers and great cable TV numbers, quarter where they saw revenues pick up quite a bit. And their losses, they had an operating margin of negative 6%, a little bit worse, kind of in line with what they had last year, but still that was the same quarter, but a lot better than the last few quarters from this company. And indeed, when we look at what they're doing, they're seeing some orders for their data center products, but they're seeing a lot of orders for their cable products. Now, in the data center, there's a migration going on from 200G to 400 gigabyte to 400 gigabyte to hopefully 800 gigabyte and hopefully 1.6 gigabyte products and networking. They sell these connectors that go on the back of machines and move information in an optical fashion, like Coherent or Fabrinet, two other stocks that I own. You can tell I'm bullish on this sector. So what we see happening here, the questions are they getting 400G orders? Are they ready to make 800G product? Are they ready to make it in the US as well as in their manufacturing capacity overseas in Asia? And so a lot of questions about that. They say they've got a new customer who's taking their 400G products. So in addition to Microsoft and Oracle, big customers for these guys, they've got a third customer. Now, the 3 out of 5 largest hyperscalers are actually accepting their 400G product. But it wasn't the huge growth that I was certainly hoping for in data center, although they got it in cable. There's just tremendous volatility in this industry here. But specifically, when we look at the data center business, we saw it increase only 8%. And that muted data center growth of 8% was a concern. I think that's why the market reacted to the stock as it did. The market's selling the stock off. It's been very volatile, as I mentioned. And after I was trading the stock down 10% after rising 71% in the last year. But as you can see, the stock has just gone all over the place with any given quarter in terms of what's going on with the revenues and the lack of profits there. Now, in the quarter, the company was asked about the build-out that's going on. They're adding a lot of capacity for this company, and they're automating a lot of that with robots on the factory floor, and everyone likes to talk about robots. But what's really going on here? When is 800G going to happen? Gig going to happen in the U.S., manufactured in the U.S., sold to U.S. and international hyperscalers, as well as the 1.6 terabit. And when's that going to happen? And we didn't really get any great answers. Here's the CFO, Stefan Murry.
As far as what this would bring to us in terms of incremental capacity, it's going to be designed for production of primarily 800 gig and 1.6 terabits. We're still working with our customers and other related parties to figure out exactly how much of that capacity is going to be built in the U.S. versus other locations. So I can't answer that question directly, but it's going to be substantially targeted at U.S. investment. And again, mostly for 800 gig and 1.6 terabit.
So designing capacity for this data center growth, but are the orders there? Not quite yet. They're still gauging what their customers want and when they want it. And so we'll continue to watch what goes on here with Applied Optoelectronics. But that's a lot of information. What's your big takeaway? I want to give you that. So Applied Optoelectronics fourth quarter numbers and full year numbers for that matter. This is your drill down earnings takeaway. So you saw over $100 million in revenues for this company. Fantastic quarter, 66% growth. But it came from cable, not from the expectation that it might be data center growth. So maybe the stock a little bit disappointed. These are very volatile businesses fundamentally. And that's where we get our drill down earnings bite, the one number that tells us a whole lot. The cable TV business sequentially was up 149%. Fantastic growth. The data center growth, we're expecting fantastic growth, up only 8%. They say they're still gauging what their customers want in terms of the size of those orders as they build up capacity in the US and in Asia for 800G and 1.6 terabit G. But right now, only 8% growth in data center. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson. Subscribe to our YouTube channel where you can see lots more of this report and a whole lot more.